welcome everybody to April's Investing in Identity Forum. Really excited for this one. We've had a heck of a go at it in the identity space. A lot of activity, lots of fundraising activities, not as much as we've seen over the past year and a half, but a lot of really great activity nonetheless, especially some really big deals that we're going to break down today. So as pretty typical here, we got our normal cast and crew, myself, Travis Dre, the founder CEO of Liminal, joined by Cameron D'Ambrosi, managing director at Liminal, as well as Dave Fields, partner at PTB Ventures. Welcome, guys.
Thanks for having us.
Let's dance.
All right, jumping right into it. All right, we have three big deals. Obviously, I think what everybody's talking about right now is Elon Musk's bid and then purchase of Twitter. We're going to break that down into detail. What does that mean for the identity space? Why is this a massive deal? Not just obviously from a world-changing communications business, but also for the identity industry. Then we're going to look at GDC being acquired by the London Stock Exchange Group. What does that deal mean? Obviously, GDC, we've worked with those guys for a long time now. They've been on the podcast a few times. We've done some white papers together. We've done a lot of research and work together. So be looking to Cameron for you to talk a little bit about what your thoughts are on the GDC acquisition. And then last but certainly not least is Thoma Bravo coming in, acquiring SailPoint for almost $7 billion, all cash, taking these guys private. What does that mean? Thoma Bravo has been on a tear this year, taking companies public to private. Seems like a trend right now, taking things public to private. Obviously, there's a few opportunities out there that maybe we'll talk about here, where you have some public market companies that could be next on the docket. So let's go ahead and jump on into our first topic of the day, which is, of course, Twitter. So why don't, Cameron, you've been nonstop following this deal, really since it started to bubble up on the internet. You're very excited for this. Why?
Well, don't peg me out as some sort of crazed Elon Musk fanboy. But I think what has excited me the most about this deal is this digital identity hook that, Elon himself, the bird father, you might say now, has put out in terms of his plans for the platform, which you were kind enough to kind of put together this to-do list here. He said openly that he wants to promote free speech on Twitter, defeat the bots, authenticate all users, and open source the algorithms. In many ways, obviously, I want to anchor on this notion of authenticating all users or authenticating all real humans, as he said in this screenshotted tweet, and why I think in many cases that is going to be the linchpin of his ability to hit these other goals. I think it's been safe to say that up until this point, Twitter has resisted putting a true identity layer on the platform because they felt that that would not be conducive to hitting the traditional growth metrics that they felt, investors wanted to see, which usually are, new accounts opened, monthly active users, showing growth of the platform, and that putting friction in place, either booting people off the platform for failing to authenticate or having them have to jump through hoops to verify their identity in order to tweet, would not be aligned with their perceived interests. It seems like Elon Musk has a different perspective here. And I must say, I'm excited about what that prospect holds for bringing this broader conversation around identity kind of to the forefront nationally. I think there is a tremendous opportunity here to put a true identity layer onto the Twitter platform that brings, as you've alluded here, blue checks, not just to the Elon Musks and the celebrities of the world, but to all users, and the potential for real identity to, if not completely clean up the discourse, I think put some guide rails on it in many ways that are, I think, a better option for moderation than simply, banning people or deleting tweets. Anybody who's been on Facebook knows that certainly having your real name attached to something is not a complete barrier to doing terrible things, saying terrible things, being racist, being sexist, etc. That being said, I think it is a great first step in terms of making it so that you can ensure when someone is kicked off the platform, that they're kicked off the platform for good, and ensuring that if you are a person who feels, harassed or otherwise by other users, that you can identify those people who you don't want to interact with at a true identity layer level, and not have to see or deal with them. Because with the current system, if I get kicked off for being an abusive troll, it's very easy to just spin up another account and get right back in it. Tying this to an actual identity layer makes this a much harder challenge for malicious actors. Very excited about what this holds specifically for the conversation more broadly in our society around what role does identity as a layer have to play across the broader internet, and see how people are going to react to this. I think we've already seen some early takes around concerns that bringing identity into a platform like this will be bad for free speech, and really excited to continue this conversation to see where the general population is at with regard to their understanding of these identity issues, and hopefully an opportunity to have more broad conversations around the identity layer that quite frankly is missing from the internet as it stands right now.
Yeah, so look, I think you look at the to-do list, and the to-do list represents both a pretty fundamental change in the product, and then there's also a business model change by open sourcing the algorithms, right? So there's a couple different things going on here. I think if you look at public markets, and this is investing in identity, most of the audience are working at private market companies, largely startups. Everybody talks about product market fit, pre and post product market fit, and then growth. So and then they get to IPO stage, and to be an company that can be public. Typically what people are gearing towards is how do I create a business with stability, repeatability, and predictability? And so when you have a product shift, a product change, and a business model change, you're kind of throwing those things out the window. So whatever's going to now happen to Twitter, I think there's broad consensus that Twitter is represent to the value it creates, is a very poor business as far as capturing value. So these changes that need to be made or can potentially be made are best done in the private market, where you're not going to be distracted by public shareholder meetings, and employees aren't going to be internally distracted by the massive gyrations in the stock price that come with a really fundamental transformation like this. So that's why, I see this and I'm like, great, let's see what can be done with Twitter. That's fantastic. I think my pushback to Cameron talking about real identity is that, there is a pretty big benefit to anonymity on the internet, which is that, yes, Cameron did a fine job articulating the downsides of that. The upside is that, there is some comfort, particularly for oppressed, marginalized, or minority groups, where you can feel comfortable expressing yourself and articulating arguments where you're not worried about being doxxed or swatted or personal blowback because of your viewpoint. And so I think the argument for real identity is a tricky one. And I do hope, and I think so it needs to be, I'm curious to see what Elon Musk has in mind for how to implement that, because, free speech, there's the theoretical argument about free speech, about, maybe we're not going to have as much censorship and banning, but then there's the practicality of it, which is are people actually comfortable expressing themselves? And so I think the real identity argument is I think there's some nuance there, and I don't think it's quite so simple as simply verifying all accounts. Then there's also just the argument of that's going to create a massive honeypot of PII if they're now verifying all accounts. So I'm not, I use Twitter. I think most listeners probably do. It's not, I don't think it's as easy as just, let's implement real identity and verify all accounts, but let's see what he can do. He's the, probably the most brilliant mind of our generation. He's sending humans to outer space, solving the climate crisis with, electric cars. And so, I certainly think he's up to the task here.
Yeah, and I think both of you guys are onto something pretty big. I mean, look, this company is not doing great financially. You have somebody that just bought it. First thing he says is, I'm not interested in the economics. So, it's interesting that we usually talk about the economics of deals on this particular webinar. And here we're talking about the fundamental changes to the business that are probably going to happen. Let's keep our eyes on this. I mean, obviously, we put out a lot of feelers here internally to our friends over at Twitter to see what they're hearing, what they're thinking in terms of what does this mean for them? What does this mean for Twitter? I mean, we've been in the conversation around bots at Twitter historically. It is not an easy problem to solve. It's kind of like a politician claiming they're going to end hunger. It's just a very challenging problem to solve. And so let's see, like as you said, let's see what Elon Musk can do. But generally speaking, for this audience, lots of opportunity. You have identity squarely in two of his action items, his to-do list items here, defeating bots and authenticating all users. So if you are building a product that does one of those two things or could potentially support this, this is an area that you probably want to stay up to speed on. And it's not just Twitter, right? Twitter is going to be a point to the spear, and there's going to be a lot behind it around content moderation and the like. So lots here, probably some new innovations that are going to come out of this, worth keeping your eye on, especially if you're a business in the space doing bot detection and authentication. But let's keep moving on here to our next deal, which is GDC and London Stock Exchange Group. So very interesting deal here. We were obviously partners with GDC for many different years. Got to get a little bit close to this deal. Very exciting for both companies. London Stock Exchange Group has made several moves over the past few years, most notably with the Refinitiv merger acquisition and continuing to grow out their presence in the identity space. So this is a really, really interesting one. Cameron, I'm going to kick it back over to you. Obviously, you've advised GDC and LSEG. What are your thoughts on this deal, and why does it matter for this audience?
Look, I think it makes a ton of sense right off the bat that LSEG is going to continue looking to add capabilities. When you look at where they're at, as indicated by the dots here, dark dots would be where they already are playing. We have the light dots in terms of these capabilities where GDC is adding in. Obviously, we believe, first and foremost, when we're talking about the landscape, about continuity of the market segments that your platform encompasses, GDC really plugging a lot of the gaps that LSEG and the Refinitiv unit had when it came to meeting all of the needs of their customers across the full breadth of the life cycle, getting one step closer to the source level data for these identities they're bringing onto the platform. And I think you'd be remiss to not think about how GDC fits glove in hand with the previous acquisition of GIACT by Refinitiv, which allows for a direct plug-in to early warnings bank network and the account level raw data coming out of these bank partners. So when you think about GDC plus these integrations into GIACT, you can really see that LSEG and Refinitiv are looking to get as expansive and as direct a view of identities from their inception to their complete life cycle across the financial services landscape. So makes a ton of sense in that regard. Really excited to see, how this platform continues to take shape. And it sounds like this will not be the last piece that LSEG continues to slot into this Death Star that they're building here.
Yeah, so, my comment on this deal in this business is, it was interesting to see some of the press. I think I usually comment on all these deals, what's an acqui-hire, what's a successful exit, et cetera, et cetera. Here, this wasn't really a venture-backed business. Bill I've met before, and I apologize. His co-founder's name escapes me right now, but these guys largely bootstrapped this business and built it up over the course of years. I know they took like what I would consider to be a small growth equity investment. I think a few years ago, I think it was only like a $10 million investment, something like that. So it was largely a bootstrap business. So even though they didn't publicize the deal price, it was clearly a successful, very successful outcome. I think one of the articles that was written in one of the newspapers in Raleigh, Durham, where the business was based, was promoting the fact that I think they had like they produced 25 plus multimillionaires out of this exit. So it was clearly something where they're advertising that it was very successful without actually telling people what the exact deal price was. So good exit, good on these guys. It'll be interesting to see if over the course of the next, call it, few years, if you look out more like 5, 7, 10 years down the road, if we start to see more exits like this again, with some of the dynamics in the venture capital market right now, where I think Travis mentioned at the beginning that deal activity is slowed. So we're going to see, will there be a potential contraction in the supply of capital to early stage businesses? And as a result, looking down the road, will we start to see more companies that are bootstrapped for 5, 7 years before they do ultimately take, kind of small growth equity investment? I think, a $10 million growth equity round, that today is like a large seed round, right? Like, or a very small Series A round. And for these guys, that was their growth capital. So, good on them. Successful outcome for some people who worked hard and did it the right way. So, good on them.
Yep, that's exactly right. And Bill and Charles did a fantastic job. Hats off to those guys. But also, James Murphin over at Refinitiv, doing a really great job. Obviously, he was the one that led the investment from the Refinitiv side to break into this deal and make it happen. So really interesting. And as you can see, just to kind of point to the dots here on the screen, as Cameron noted, the dark dots represent Refinitiv's core, or LSEG's core position. The lighter dots represent GDC's core position. GDC's already been built into the London Stock Exchange Group's product portfolio, so as a partner. So what you're seeing is some strengthening of the position there, but there's some gaps, right, up to that top left corner with the customer IAM, authentication, workforce IAM piece, an area that maybe we might see some more activity for the London Stock Exchange Group to focus on as they move forward. But let's continue on with our last deal that we want to break into, which is SailPoint. SailPoint, Thoma Bravo coming in. I think they made two loud investments and deals in the same day. One with Imperva, one with SailPoint here. Really exciting time for the Thoma Bravo team. Just doing some quick checks here in our link database. We have about 27 to 28 investments in the cybersecurity, fintech, identity space, directly related to digital identity. So obviously, these guys know how to put some money to work in this market. They took SailPoint private for $6.9 billion, all cash transaction, and made it very, very, very clear coming out of this transaction that they are going to leverage the additional Thoma Bravo resources. So this could be capital, this could be operating position, operating expertise. This could be maybe working with some of Thoma Bravo's other companies in their portfolio. Here I've called out 5 other companies in the Thoma Bravo active portfolio: Imperva, Sophos, Exostar, Logarithm, and Proofpoint, as very interesting additional companies within the Thoma Bravo portfolio set that could be great opportunities, partnership opportunities for SailPoint, either strategically or commercially. And where we have SailPoint on this map is at that top left quadrant area, which is identity governance and administration, where they fit squarely, and then privilege access management, which I think, if you look at the product features, they would also fit into. In the green here are areas that we're calling out as potential opportunities for SailPoint. So looking at both IAM, so both workforce and customer IAM segments, as well as authentication. this would bring those guys more central into the digital identity realm. Obviously, they're kicking butt where they are. They're, you know, a very dominant player in the IGA and PAM space, but would like to see them start to move down into the more IAM, customer IAM and authentication side of things. So with that, just kind of those are my thoughts. I don't know, you know, this is very interesting. This is the second deal that we've talked about today from a company going public to private with the help of either a very rich person or Thoma Bravo, which is a very rich organization. You know, Dave, with your experience kind of in the private equity side, what does this type of activity mean? Generally speaking, what should we expect? And also for our listeners that maybe are thinking about some strategic activity, maybe they're at a public company today and maybe being courted by some private equity, what would you expect some of those outcomes to look like?
Yeah, so I think so there's a whole bunch of points I want to make. Let me see if I can tick through them succinctly. You know, I talked about the importance of taking Twitter public so that they could make product and business model changes that weren't well suited for, you know, which the public market's not suitable to be making changes like that. This is definitely not that. Thoma Bravo is buying a business which is mature and has good distribution and good cash flow, but they think they can do more with that distribution and cash flow. And so there's this is kind of a little bit more in the financial engineering realm of things. And so really what I expect them to be doing is they've now found what they believe is a platform business that has deep penetration into market segments they like, and they're looking out at the market, seeing the explosion in the number of companies that have happened, you know, like all the new identity startups, and saying, hey, there's a whole bunch of companies that aren't going to get to scale. They're going to have nice product. We can buy those products and then push them out through our distribution channels. And then potentially with, you know, with strong integration, have great cash flow and profitability metrics 5 to 10 years down the road. And so this is that type of sort of private equity playbook. It's financial engineering and M&A strategy. I think there's a broader comment I want to make is, you know, you think about where we were a year ago when we, I think, really started doing more of these investing in identity webinars. And we were almost always talking about like 9-figure growth equity rounds, right? We were having Series B, C, and D fundraisers where companies were raising 100, 200 million bucks a clip. You look at like the last couple we've done, we're now talking about like M&A, PE buyouts, not as much of those like big growth equity rounds, those supercharged growth equity rounds. And so there's clearly a market shift that's happened here. The other point, so which brings me kind of like the broader point about, you know, maybe some listeners may be familiar with this, which is kind of like the broader private equity landscape. But, you know, 5-10 years ago, you know, the realm of like $20 billion funds, $20-30 billion funds was really the exclusive realm of like Carlyle, KKR, Blackstone, Apollo, which are the 4 publicly traded private equity platforms, right? And now we've got Thoma Bravo, Vista, and Insight, who are all raising $20 billion funds. Many of them are also, I know Thoma Bravo also now has a credit arm where effectively they are lending to software LBOs. So 10 years ago, we were not seeing private equity LBOs in the software business. Now we are seeing that. That's because they've got these gigantic fundraisers where now what was previously considered like a niche private equity player is just a private equity player. And so it's kind of the convergence of Mark Andreessen's software is eating the world with investment management, right? Where now being an investor in software just means you invest in everything, or your purview is really this global remit versus being this like niche player. So what I would say is like, look, we've seen several big funds raised, and we're going to see a lot more take privates, and then they're going to be just consolidating and gobbling up a lot of these players who have raised $50, $100 million growth rounds in the last couple of years. 3 years down the road, we're going to see the platform businesses that Thoma Bravo, Vista, Insight, obviously the other 4 blue chip private equity funds, like we're going to see their portfolio companies buying a lot of these companies if they don't make it to the public market. So that's both good and I wouldn't say bad, but it's not necessarily the outcomes that people were kind of gearing up for who have like invested in those rounds. But it's good to have that as an exit opportunity. So that's that's kind of what I would lay out for everyone.
No, I think that's extremely helpful and interesting. When we saw a lot of those big rounds, right, the $100 million Series B rounds and things like that, you take a step back, and we were even saying at the time, like, hey, investors are underwriting this thing at $1.5 billion, $2 billion. I don't know how many $2 billion companies we're going to see in the next couple years.
And by the way, when they're underwriting them at that valuation, they're then expecting a 3 to 5x is what they're underwriting on their multiple of invested capital, right? So if they're underwriting at a $1.5–2 billion valuation, they're expecting exit outcomes of 5 to 10. Now, they're not expecting all of them to get there, but that is the target they have in mind for, if successful, then this exit. So, it's not even, will they exit at 1.5 or 2? It's, will they exit at 5 to 10? And if they don't get to 5 to 10, then private equity buyers are the people that are going to be out there.
Right.
Yeah. Maybe that's where you're headed. I know I cut you off.
No. I think that's exactly it, right? And for this audience listening, right, it's pretty critical to just be reminded that capital is necessary. We just talked about a company, GDC, that bootstrapped the majority of their business, had a great exit, and did very well for themselves. And they did well for themselves because the expectations of the folks around them, including investors. And we see a lot of times companies maybe stretching a little too far, listening to investors to take all the capital they possibly can. And now we are in a market where you're starting to really see platform businesses flush with private equity cash from companies like Thoma Bravo that can really be disruptive to your growth strategy plans. And so when you're thinking about your own strategies, figuring out how do you partner with these businesses, how do you make the inroads with these private equity companies, how do you set yourself up for defensive moats and barriers that maybe perhaps you weren't really thinking about before. Now's the time to start being a bit more defensive than offensive when it comes down to your growth strategy. And we have spoken to many of you that listen to this. We've also spoken to many other companies, right? We work with hundreds of companies every year, and there has been a general push for offensive growth strategy. Now is the time to really, really firm up that defensive growth strategy. And you do that through partnerships. You do that through strategic alliances. You do that through customer either diversification or concentration. You do it by figuring out how do you make sure that your revenue is safe. And so that's just we have to kind of end it here, but that's just some general guidance for the folks listening to these calls. And actually, I'll take that as my last thoughts here, because we are on the page here where I wanted to get your guys' last thoughts. Obviously, those were mine. Cameron, what are your last thoughts? We talked about Twitter. We talked about GDC and LSEG. We just talked about SailPoint and Thoma Bravo and the rise of private equity and to do these public to private buyouts. What are your final thoughts for the group here?
I mean, look, it's a cliche because it's called investing in identity, but I think we are beginning to see the future taking shape here in terms of how all of these platforms are thinking about viewing identity holistically, laterally, if you will, across the life cycle, whether it's anchored in cybersecurity like Thoma Bravo, whether it's anchored in risk and compliance like in Refinitiv, whether it's anchored in communications, social media like Twitter. If your platform cannot support identities end to end, you're not going to have a seat at the table sooner rather than later. And I think that's why we're going to continue to see acceleration of these types of bolt-ons, strategic acquisitions to unlock these capabilities for platforms that are thinking ahead. And the folks that are not on top of the 8 ball here, I think we're going to see them start falling behind sooner rather than later.
Yeah, and I guess I think I have similar thoughts as Cameron. I think I would sum it up as like, it's a good time for identity, but a challenging time for identity businesses, just given what's happening in the capital markets, fact that growth expectations have changed, and we're still dealing with a whole host of problems that are affecting buyers' willingness to engage with new vendors. So that's challenging. I think the exciting times is we are seeing like the fact like Twitter going private. I'm excited to see what happens. And I think it's a good thing for the industry that we're seeing buyouts like SailPoint and some of these other deals happen. It's also going to create, it'll be interesting to see what the new angels that are minted at GDC and the approach they take to the industry, right? So I think that's good. And from challenging times comes strength. So let's see what happens over the next 6 months.
Sounds great. And with that, just want to kind of point some of our audience here to our latest research. I think the ones that I'm most interested in right now are the market opportunity for usable identity and how to get there. Obviously, this is a pretty extensive canon of work that we have been pulling together for the better part of 2.5 years. But really, it's where we break down where we think this market is going. And then second to that is the crypto economy and its role in the digital identity ecosystem. Obviously, the world continues to talk a lot about crypto. This is one of our latest outside-in reports for our members. We have some additional outside-in reports coming up, including around identity networks and fraud and risk prevention platforms, et cetera. So stay tuned for those. But as always, you can check out our latest research within your member portal for all those members out there. And of course, we have our recent blog, going to continue to promote the latest digital identity landscape. You saw it here on this webinar with our 31 different solution segments, honeycomb looking thing. You can go on our website, check out a lot more about that. We have several different tools and blogs and posts and webinars, all explaining the landscape and how to leverage it for your own business purposes. And then last but not least, what to look forward to at Liminal? Well, we have our Liminal Summit next week, which we're super excited about. I know both Dave and Cameron will be there alongside a sold out group. It's the 100 most important investors and executives in the identity space getting together out in La Jolla. If you weren't able to secure your spot this time, make sure you keep up with the Liminal Summits in the future. I believe we're trying to pair one up for later this year. And would love to definitely have you all join us at a future event. And so with that, want to thank the guests here today, Cameron and Dave. As always, thanks for joining. And for everyone listening at home, thank you for tuning in for this one and excited for more activity with investing in identity. Thank you.
Bye.